I'm Patty Ritter on behalf of the Business Payments Coalition. We're happy to have two great presenters talk about ISO 20022 today. Before we get started, I have some administrative items to cover. Is everybody still hearing me okay?
Yes, ma'am.
Okay, thank you. You're all currently muted. If you have questions for the presenters, please send those using the Q&A feature instead of the chat feature. There will be time for Q&A at the end of the presentation. We will be recording this webinar for replay, and it will be available from the BPC website. And there's a short survey after the webinar. Please take a couple of minutes to give us your feedback. And you will have an opportunity to request the deck when you fill out that survey. Our presenters today are Mike Segal and Mike Bradley, two seasoned ISO 20022 veterans. I'll turn the webinar over to them to introduce themselves. Mike and Mike, you have the floor.
Thanks so much, Patty, and thank you everyone for this opportunity to talk with you about something I'm really passionate about, which is the business drivers for the adoption of ISO 20022, or what I like to think of as data-rich payments. Let's see here. There we go. So we all kind of know what's been going on in the last 7 months or so, and we don't really need to talk about it. But what we're going to talk about is the opportunity available to all of us to speed economic recovery and growth. Before we go further, some deeper introductions are in order so you know where we're coming from. I'm Mike Segal, and I'm the founder of 20022 Labs. And by background, I'm a multiple-time tech entrepreneur, a fintech VC, and a corporate innovation advisor. And my introduction to the world of payments started in 2010 when I was helping Swift, who's the custodian of the ISO 20022 standard, build out their intertribe programs, which were designed to create a bridge between their 10,000 member banks and the emerging fintech ecosystem. I'm joined today by Mike Bradley, who's spent his career as a product and strategy leader in digital banking and payments, including as the head of Visa Canada's product efforts, where he's also a member of their Global Product Council and is a leader of a variety of initiatives for the Bank of Montreal. I formed 20022 Labs because I believe that ISO 20022 represents a truly profound, but not yet well understood shift in the role that payments can play in facilitating commerce. We believe that by adding context to payments, ISO 20022 will make banks and companies more efficient, competitive, and customer-centric, ultimately leading to stronger, more inclusive economies. Now, some of you may have noted that last year, there was over $500 billion in mergers and acquisitions activity in the payment space. And that was in no small part because of the huge data-rich opportunities on our horizon. But we believe that driving those opportunities takes a global, industry-wide, unified effort to promote the benefits of data-rich payments and identify and address the challenges to adoption. So 20022 Labs is where members of the data-rich payments ecosystem can be stronger working together than independently. I'll turn it over to Mike now.
Well, thanks, Mike. So we're going to start by taking a step back and putting some thought into how business data and payments data are transmitted today. And we're going to start with the legendary check from the analog world and just spend a minute talking about what it tells us about payment messages. So as you can see, everyone's familiar with this. Kind of the main data elements associated with making a payment by check are the date on which the payment is made, the payee, of course, the amount, and the signature line, which represents the authentication of the payor, and therefore kind of justifies the check. Those of you in the banking sector and in corporate payments will also be very familiar with that good old micro line at the bottom of the check, which has account number and routing information that allows the check to be processed efficiently. But now if you take a step sideways and you think about the business information that underlies the check, it's quite a different picture. If this check was for payment for an invoice or a group of invoices, those invoices would represent the items that were purchased that the check was for, the number of units and unit price associated with those, the taxes that may have accrued, and some shipping and delivery information, as well as payment terms and a due date. And moreover, it may, if those that aren't speaking could go on mute, there's just quite a lot of background noise. Thanks. The check may have been linked to multiple invoices, which then would have the same level of detail. And how are these two processes linked? Through the memo field, which is appropriately for the payments industry, a very small point of connection between the two processes. So if we can move to the next slide. And sorry, can those that aren't on mute, could you please go on mute? There's quite a lot of background noise. Thank you. Mike, I don't know if that's you. There's a scratching. Yeah, thank you. Great. So moving to where that leaves us in the digital world, we can see that payments and business data have kind of grown up to travel separately. Payment systems have automated themselves with efforts made to reduce errors, reduce costs, and increase speed. Those payments system evolution have included things like introducing new and low-cost payment streams to replace checks for applications like payroll and for recurring payments. Of course, we're all familiar with ACH credits and debits. The payments industry has streamlined and eliminated paper in a lot of cases by truncating and imaging checks and improved transaction flows. And in the cards world, from where I come, there's been a lot of effort put into adding value to transactions with things like added rewards and benefits associated with payments. Corporates have undertaken a different journey to automate their processes, first through things like invoice automation, productivity tools like Microsoft Word, Excel, good old email, and more recently through ERP systems and treasury management systems that have automated the connection points to the back-end business processes and the front end of how corporates interface with their trading partners. By and large, corporates have been users and heavy users of the payment systems, leveraging ACH as heavily as they can, but there was no strategic, what I'm going to call strategic effort to bring these processes together. There is one exception that is worth calling out. In the 1990s, EDI, using the ANSI X12 standards, promised to deliver remittance data together with payments in a new stream of payments, and major corporates like General Motors and Walmart, at least major back then, embraced EDI and even forced it upon their trading partners. Ultimately, EDI was too complex for those times and has been overtaken by 20 years of technology learning. If we move to the next slide, Mike. Yeah, great, thank you. The symptoms of what we're calling digital divergence are evident and everywhere. Take this series of activities that could be involved in as invoice processing as one example. A document is received and scanned for record keeping. The key details are captured into systems which are matched in an approval process, and the data that is relevant and the document itself is archived for record keeping and for safekeeping, while the payment is sent out through largely a separate channel. In this case, we're showing mail, which sadly is still the case for a lot of payments, but of course, many of them sent electronically through ACH as well. What this process leaves us with is documents, not data. And of course, for anyone who's tried to search, scan documents and find critical information, you know how futile and frustrating that exercise can be. Companies and banks have bought technology and created systems to automate these complex processes and put staff to work reconciling paper and manually managing follow-ups and status checks. But all of these we're going to put forward are automating a process which is kind of missing the point about how business data and how payments should be traveling together. It creates significant errors, potential for errors, and lots of opportunities to cross the process up. So if we move forward now to slide 7 and the differences ISO 2022 makes, and Mike, if you could, thank you, flash up the whole slide. We're kind of fast forwarding to a new generation of technology. So ISO 2022, as kind of Patty alluded to at the beginning and Mike alluded to, is an emerging payment standard that promises to help with a lot of these challenges that corporates and banks have. Previous versions of payment messages, and I think this applies to card-based ISO 8583 or ACH standards, have dedicated fields for data elements. So you know that a certain field has a fixed number of digits and fixed placement for things like account numbers and for the same kind of fields that were present in those checks, the check that we reviewed earlier, the amount, the payee, the processing date, potentially authentication. But any additional or value-added information was kind of limited to a field or two that could create free-form information that allowed for the payment to be reconciled back with the underlying business context. With ISO 2022, the opportunity is there to do things differently. And now we're kind of going to take a step down into ISO 2022 to talk about what it is. And we decided to best show this through an example of how a current payment message would be structured versus how ISO 2022 would be structured. I like to think about ISO 2022 as XML for financial messages or for payment messages. And this message syntax shows how that would manifest itself. So on the left-hand side of the slide, we've got a current Swift MT message. And on the right-hand side of the slide, we've got ISO 2022 structured format. And the first thing that will jump out at you, I expect, is that each field is labeled with its own syntax. So you can see the name and the address and the details about how that the various fields would be constructed. And the second kind of key feature, along with tagging and labeling data, which allows for systems to be able to understand what data is coming in and how it should be used, is that it is a very flexible format that allows for a message to be extended. And that extensibility comes with the ability to send multiple fields and multiple groups of fields that include potentially all of the information that would have been included in an invoice. So, that vision that we had earlier of payments data traveling separately from the check, the invoice data traveling separately from the check, now we can see the invoice data being embedded right into the payment message. This particular example, I want to call out a particular benefit, which is that if you notice the name of this business, the original Syria Kibe, with the country code that it is being sent to, Singapore in this case, in the message syntax we've got with Swift MT today, that name Syria might have caused this message to be delayed because of potential concerns about sanctioned countries and receiving financial crediting to those particular countries. In the case of ISO 2022, it's immediately evident within the data set that the country on the receiving side is Singapore, which is not subject to any sanctions. And therefore, the risk of the message being delayed through the process is now much lower because of the clearer labeling of the data. So that's just one benefit. We hope to show several more as we proceed that are associated with 2022's structured format. One more note on this particular slide is that Swift, which was mentioned earlier as being kind of the custodian of the program, has a dual role in managing the program. First off, while the standards are created by ISO, the International Standards Organization, SWIFT is tasked with managing the standards on behalf of the financial industry. So that includes managing a data dictionary and managing a whole set of standards that define how these structured formats are to be work. And certainly all of that information is publicly available on SWIFT's website today, and that link will be provided as part of the downloaded slides. The second role that SWIFT plays, if I just add one more point, is that it is their international financial messaging system that is going to be one of the key users of these. And that kind of points out another benefit of ISO 20022, which is the global interoperability of payment messages. This is not a payment format that is developed for a particular payment network in mind. It is developed in order to be globally interoperable, and the data sets are created with that in mind. So if we flip forward to slide 8 and kind of go back to how we have been looking at messages traveling together, ISO now changes our paradigm. We now, if we start with that same business process of multiple invoices being paid with an individual check, let's follow how that would work in an ISO-enabled model. We'd have the payor company, which in ISO language is called the debtor, initiating a payment message from within its accounts payable systems. And that payment message would now have embedded with it the business reason for the payment, a reconciliation key, and any other reference data that's required, trading partner details, including addressing and contact information, would include any potential disputes about the amounts that were being paid and differences in the amounts relative to the invoice that had originally been received. And as the debtor, they would initiate this ISO payment message via their debtor bank, and that debtor bank would send the message through a payments network to the payee's bank, the creditor bank, who would then forward the message to the creditor. And the key in all of this is that all of that data would be traveling unadulterated through the system. So as it's received by the creditor, what that would allow the creditor to do is to be able to do straight through processing into its accounts receivable system. And all of the data that I've described at the payor side would now be received within the payee's systems in an automated and untouched way. So hopefully that starts to illustrate, and if you flip to the second part of the slide, Mike, there are real benefits associated from the standpoint of customer experience, from the standpoint of faster payments processing and straight through payments processing, that all of that becomes a whole lot simpler to the process that we see today, where reconciliation and a lot of manual processes are involved. Now, the last point I want to make on this slide is about request payment. And we're kind of using the phrase that it flips the script because it's payee initiated. And I'm going to say the first lesson I learned in payment school was that the transaction would, that the payee is the motivated party in any given transaction. So what request payment allows you to do is to be able for the creditor to initiate a transaction also through the banking network that flows all the way through the system. And then the debtor, the payor, by acknowledging and approving that request payment transaction, initiates a smooth flow back through the system. And therefore, the issues of reconciliation are even less so because the creditor's payment has been responded to by the debtor. And therefore, kind of simplifies the process yet again. So if you flip to the next slide, Mike, and I'll try to kind of speed up a little bit here, is that we've got ISO 2022 target state, or really what we're intending to try to do. we've got bank benefits that include things like fewer orphan payments and exceptions and better customer service for corporates in terms of trying to track payments down, including the status of payments. Also, from an application standpoint to banks, the ability to be able to do your own KYC or AML by embedding data within the transaction that identifies the beneficiary and the ultimate beneficiary of the payment makes payments compliance that much more straightforward. Back to the corporate, from the standpoint of being able to send out compatible messages across payment types, that really we believe that the payment should be routed to the right rail, but that the data should flow no matter the payments rail on which it's sent. So whether that's TCH or ACH or Fedwire or chips, or even some of the card-based payment networks over time, that the data should flow through the system unadulterated. And not just domestically, but globally as well. So as I described earlier, having SWIFT enabled with ISO 2022, which should begin in the year 2022, that would allow for seamless global payments and labeling the data fields, improved AML, improved KYC, and having those payments flow on a seamless global basis. And then the last piece in terms of a target state would be the potential for corporates to really kind of step up and establish common corporate to bank standards, which would kind of suggest that structured remittance data would flow in the same way, no matter which bank a corporate was dealing with. And there's a role that payments networks can play here, that corporates and banks can play in making sure that the corporate is not set up with multiple different payment standards in order to be able to ensure that the data is flowing in a simple way and straightforward way. So I'm going to turn it back over to Mike now, who's going to talk more about the standard and what it means.
Thanks a lot, Mike. Okay. So now that we understand a bit better of what ISO 20022 is all about, I wanted to talk about the opportunities it creates. Those are the essence to the business drivers of data-rich payments. And I think that starts with who's involved. The way we look at it, one of the most important things to note is that by adding rich data and context to payments, you actually change the landscape of the payments ecosystem, which today is made up of the payment networks and the banks that move money, as well as the technology vendors that help them do it. The really exciting thing to think about is that when you add data and context to payments, it doesn't only impact the message formats, but the business processes and the definition of the marketplace itself. Our payments ecosystem grows into the data-rich payments ecosystem, which adds corporations and the vendors that support them, like ERP and treasury management and emerging fintechs. Now, as the system expands, there will certainly be a lot of change, which means a lot of opportunities for revenue growth and differentiation. The way I tend to think about it is that we're now in payments where we were in 2008 for all of financial services when fintech started to take off. The payments industry M&A I talked about in the beginning is one symptom of this. Another is that, since COVID crisis, many of the top VC firms around the world have issued new investment theses where basically it's a statement of intent to start pouring money into what, depending on the firm, they call next generation payments or accounting 2.0 or CFO tech to go after the new opportunities in this marketplace. Now, as Mike's example of MT versus 20022 alluded to, SWIFT introduced the standard to solve some of the problems that they and their member banks were experiencing. When you think about the value these capabilities can add for banks, they're interesting and necessary, but when it comes to justifying the price tag of adopting the standard, they're a little uninspiring, particularly in a world where margins on payments are under pressure, which is why we believe so many projects are anchored in a like-for-like implementation driven mostly by compliance. What we think is really exciting is that the standard lets banks leverage their trust and client relationships into new data-driven products and services and creates an opportunity for greater customer loyalty. Now, well, I'll give you an example of this. It's not a 20022 application, but it's a great example thinking about Silicon Valley Bank, which is sort of the premier bank for startups and venture capitalists. Because they're in the middle of those transactions, they are probably the world's best source on startup valuations, which they offer as a fee-based service. If you want to take a corollary to the 20022 world, I was having a conversation with a global bank whose commercial business is anchored in natural resources and logistics and manufacturing. Just imagine what they could tell their customers about trends in the supply chain. As for ERP integration, we talked to any number of banks who were under review to win or lose business based simply on how easy they made it for their customers to reconcile payments. As a bank, think about once you're embedded in your customer's business operating system, you're both really hard to shake loose, and you have a whole different way to deliver new services to them. Now that we sort of understand what the opportunities for banks are, really what's important is to think about, well, what do the corporate customers want out of this? Ultimately, the corporate customers represent the demand side in the data-rich payments industry. It's their transactions that ultimately pay for everything else. And the first thing they want to do is make payments disappear from their business processes. Think about it the way that Amazon blew up because of their one-click purchasing, or that ride-sharing got so popular because you don't think about the payment anymore, you think about getting from point A to point B. Now, this list isn't exhaustive, but you also get to think about how and why all the big internet players are embedding financial services into their businesses, and what it could mean for the growth of corporations if they were to start embedding financial services for their customers, which they can now do by bringing together the data they have about business processes and payments. Now, as a tech entrepreneur and fintech investor, this next set of opportunities is the one that really gets me fired up. If you think about how many banks and payment networks and corporations there are on the planet, and that in order to remain competitive, they need new picks and shovels to mine that data-rich payments ore, the opportunities are truly astounding. This is who has been pushing the M&A spree that began last year, and this is the reason that so much venture funding is beginning to pour into this space. Now, instead of going into detail on the first two on this slide, I want to encourage you to download the white paper on our website, which frames a lot of these two opportunities. On the third point around AI and for corporate plus payments data, there's probably no one on this call that doesn't know that AI and machine learning are sexy. But there's today precious few solutions out there that are specifically designed to create insight and value out of business processes and payments data. One I know of that was just recently acquired, as an example, looks at invoices and customer behavior, payment behavior data to maintain a real-time cash flow forecast, automate collections, which turns out with this particular company generates about a 22% improvement in collections, and even services some customer credit assessments within Salesforce that a salesperson isn't selling to someone who can't afford it. Now that we sort of have a high-level understanding of why there's lots of opportunities for cost savings and new revenue in data-rich payments, let's talk about how we see folks adopting the capabilities to support those drivers. Candidly, it starts out with just simply the awareness of what ISO 20022 is, that it exists, and the huge opportunities that it presents. We wanted to share our framework towards adoption that we've seen as the key trigger for when banks and corporations are adopting that goes beyond compliance. And that comes down to looking at, well, for a specific company, what are the benefits that 20022 can deliver? And so one of the exercises that we went through with a group of insurance companies, in fact, the treasurers of those insurance companies, was a use case around what happens when an ACH debit for a premium payment fails. And that's what this flow represents. Now, I don't really want you to try and read the eye chart of these little boxes. What I want you to note is that the blue boxes outlined in pink are the ones which are manual steps in the average ACH debit failure process. When you add ISO 20022 to the equation, this is what happens. Look at the change in the number of manual steps that you need to take. And if you were working with a bank that was fully ISO 20022 compliant, the chances are those two processes can go away as well. So when we looked at this and we sat down with these treasurers and talked about, well, what would this mean to you? They came back that for a failed ACH debit, they, on average, could save anywhere between 27 and 45 minutes per failure. And that would equate to staff cost savings of nearly $1 million a year. Now, this in itself isn't enough to justify a full transformation project. But remember, this is one business case or around a single use case of about a dozen only for property and casualty insurers. The impressive thing was when we circled everyone back up to talk about their overall experience, we got some surprising responses. The first one was that they got a new appreciation of how their data, blended with data in other silos around the company, could really make an impact in the efficiency of the company. The more surprising and interesting one was that they said that the process of thinking through how much time and energy automating that business process would take gave them a new way to have conversations with their internal business partners about how treasury and payments could contribute to the overall customer experience, which is the #1 strategic priority of the company. So really, the point I want to make here is that it is about automating business processes and embedding payments into those business processes. And when you do that, you need to think in terms of vertical industries, and you need to think in terms of functional flows, right? A natural resources producer doesn't think they have a whole lot to learn or understand from an insurer because their business processes are different. The impact that you can have on treasury management by combining payments and data about those payments is different than what you would see in payroll management. So I want to give you a couple of examples here, some from each. We spent some time with a large bank who had a very healthy mortgage business, and what they were looking to was how could they reach earlier in the home sales process and later into the mortgage process in order to capture more of the value in that value chain. We spent some time with a large logistics company and learned that their trains, as they're sitting in the train yard, cannot leave the station until they confirm that the shipping fees for every parcel in every box in every boxcar has been cleared. So that train is sitting there in the station until they have reconciled the invoice data with the payments data. And the third one is in that same group of insurers, we ended up talking to a group of their brokers. And what they said was that reconciling commission payments against policies that they've sold is so difficult that they simply write it off, and they make their money on lending to their corporate customers for the premiums. So 20022 can have an impact on every single one of these industries and of these functions. And that is ultimately the business drivers. Now, the reason that this is so important right now is because we in business have just gone through a huge digital transformation. Just in the last 6 months, we've seen larger growth in e-commerce than we have in the prior 10 years. And we've all been forced to conduct business via Zoom and WebEx rather than in our offices. So before COVID, you probably had a couple of years to go down this data-rich payments modernization path. But now everyone's expectations of digital first have gone through the roof, and there's no turning it back. So the time to accelerate your adoption of digital-rich payments or data-rich payments is now. To bring it all the way back to where we began, we believe that efficient financial systems are mandatory to facilitate growth and reignite, to facilitate recovery and reignite growth. And 20022 has a critical role to play in that. But to grab that opportunity, you need the clear message, I think, that we shared with you about why data-rich payments are important. We need to build confidence amongst corporations and banks that 20022 is the path forward and that there will be a return on their investment in a reasonable horizon. And you need to leverage the experiences and best practices of each other to do those two things. So really the question to be asking yourself right now is, what competitive advantage do you want to try and achieve through your deployment of ISO 20022? Where do you want to fit on this spectrum of laggard to leader? Now, it's all a lot to take in, but we want to tell you that there's help available. That Business Payments Council Coalition has a lot of great content on their website. The regular vendor sources that you and media sources that you typically turn to for either modernizing your own payment systems, or if you're in a corporation, your business process systems are beginning to bring a lot of this insight and content to the table. And there is a early industry that's growing pretty quickly in terms of software vendors who help with various elements of migration. And then finally, our role as 20022 Labs is as a membership community to work on accelerating adoption by working with around the unified message of the benefits, identifying the challenges and identifying the solutions to those challenges, and providing a bunch of other tools that are useful in this journey. One of the tools, and in a follow-up email, you're going to get an announcement of that, is a new corporate adoption sandbox that we're going to be doing a webinar on in the next couple of weeks. So with that, I'm going to turn things back over to Patty, and thank you all.
Okay, well, thank you, Mike and Mike. We have had a number of questions come in. So let me start with the first question. Is this ISO 20022 data similar to or the same as credit card level 3 data, the B2B data in credit cards level 3?
Yeah, so I don't mind jumping on that one. Hopefully I'm not on mute, so it should be coming through. I think the short answer is it can be, but the issue, and I oversaw corporate card products for Visa for many years, including level 2 and level 3 remittance data. And the challenges have been as much about corporate integration through point of sale systems as they have about anything. So I think, if you were to ask the card networks about the experience with level 2 and level 3 corporate data, but the issue has really been about the adoption of that data. To be fair, it's embedded within a format that was developed a long time ago. And while it travels across the network, the network and the endpoints, perhaps more importantly of the network, whether it's the financial institutions or the corporates receiving those transactions, are not really geared up very well in a lot of cases to be able to process that data. So I think there are some analogies and certainly some lessons to be learned from why we haven't seen enough adoption of credit card level 2 and level 3 business data, and how we might do ISO 20022 differently.
Okay. We have another question here about mapping, and I'm going to, a couple questions. I'm going to make this a little bit generic. There's a question about documentation that explains mapping, for example, between Swift MT and Fedwire and CHIPS. And I'll just say also ISO 20022. Do you know of a good place people can go to look for mapping resources to compare the different native payment types and how they relate to one another and to ISO 20022?
I mean, sorry, Mike, if you want to jump in on this one, you go ahead. I mean, what I would put forward, I think, is this sounds like a great opportunity for the Business Payments Coalition, in terms of kind of the businesses that are using payments and the value of mapping those fields. I have not, so the short answer is I have not seen that, but I can see the value in it.
Yeah, you might also want to check in, at least I know on our site, we've got a list of migration vendors, and probably any one of those can help begin to address that problem.
Okay, and I will note that Swift has done MT to ISO 20022 mapping, so you can go out on the Swift website, and I believe on the Federal Reserve wire migration website, there are also some migration resources there. So just want to point people to some of those resources to go look at. Okay. The next question we have is that you showed the data traveling, remittance data traveling with the payment. What about ISO 20022 remittance data separate from the payment? How would we do that?
Mike, do you want to take that?
Sure, happy to. Mike. I was waiting to see if you were going to jump on it.
Yeah, no.
So the short answer is that there are models where corporates can start to take advantage of ISO 2022 messaging in advance of their banks or payment networks being ready for 2022. In fact, 2022 Labs just authored a white paper on this very subject in partnership with a dozen or so industry-leading vendors in the space. The white paper itself is available on 2022 Labs website. It summarizes methods where a corporate can either take the initiative themselves, work with an industry-leading FI, who is a financial institution, who has stepped out in front of ISO 2022, or work directly with either their ERP vendor or an industry vendor to make 2022 happen. So there's not one size fits all answer to that question. It really depends on your business context and your vendor set. So more info can be found in the white paper that I referenced.
Okay. And I know we're running a little bit over, but I'm going to go ahead and ask another couple questions. We're over the 45 minutes, but we're not over an hour yet. So I'm going to give you guys an opportunity to answer a couple more questions here. Can you give any examples about bank adoption and maybe banks that have done it well or banks that have not done it so well?
Yeah, I can give a couple. I'm sure Mike can too. One of the banks that has done it pretty well has a lot of business across Europe, and the introduction of one of their payment schemes, SEPA, is overlaid on ISO 20022. So a number of those institutions which have the business there in Europe have done a great job of this. And one of the things that we've seen is they have begun to win business in markets they operate that they otherwise would not. We have one example where a supplier is basically in the energy industry, does several $100 million a year in payments to their suppliers, and that energy company selected one of these banks to be their new cross-border payments bank, simply because they were able to grab the benefits of automated reconciliation. Mike, you have a counterpoint.
Yeah, I think the counterpoint probably would be and we've seen this in some European banks as well, is that if they view it as a compliance initiative and really just look at the data fields that are changing as they move from their current payment network to an ISO-enabled payment model, that if it's just a like-for-like comparison and there's no effort made to kind of work with customers, the end corporate users, about how to take advantage of it, it ends up just being a cost. And you know, the worst business cases that I've had to present inside banks and payment networks are those that are just about infrastructure upgrades without a lot of benefit attached to it. So I think where a bank is approaching an upgrade as a like for like, I think I would encourage those banks to kind of get out, speak with customers about opportunities to improve processes, and you might just discover lots of opportunity for the bank there in this new standard. So no one gets excited about a standard, people get excited about business benefits. And that probably links back to, you know, the purpose why we've started 2022 Lab.
Yeah.
Okay, so we're running over time a little bit, but I do want to thank you, Mike Segal and Mike Bradley, for an excellent presentation, and thanks to our attendees for joining us today. And Mike or Mike, do you want to give us just a little preview of the follow-on webinar that we're having on September 22nd? Just say a sentence or two about that.
So what we're planning to do is an interview with at least one, and we've requested a couple of corporates who have gone through the process of adopting 20022 in their activities, and we want to get them to share, you know, sort of the why they did it, how they built the business case for it, and what their experiences through adoption were, and what benefits they've seen as a result of adopting. So it'll be a great opportunity to have a dialogue with the demand side of the market about why they are doing this.
Okay, thank you. And we will send a registration link for the second webinar on September 22nd shortly. We'll send it out to the Business Payments Coalition contact list. We'll post it on the website, and we will also send it out to everyone who registered for this webinar. And if you're not a Business Payments Coalition member, please visit our website at businesspaymentscoalition.org to join. And that will conclude our webinar for today. Thanks everyone for joining, and we will now close the webinar.